Welcome back to the deep dive. Today, we're peeling back the layers on a story that, well, it looks like just one legal win on the surface. But underneath, it really feels like the tectonic plates of global finance are shifting. Right now, Ripple's recent, really monumental victory against the SEC isn't just some courtroom thing. It's a direct, pretty ambitious challenge to the very system that moves trillions, literally trillions of dollars across borders every day. I'm talking about SWIFT, of course. That long-standing, seemingly unshakable giant. We've pulled together a fascinating stack of insights for you. It's a great mix of analyses, research, some really sharp preparatory notes, and I think it'll genuinely reshape how you think about, the future of money as we know it. So, yeah, this is a deep dive into the kind of disruptive force that could really redefine global finance. But hang on, before we dive deeper into this really pivotal shift, if you're finding these explorations valuable, please do make sure you like this deep dive, subscribe to the channel, and hit that notification bell. Your engagement, a quick like, a comment, sharing it honestly helps us boost visibility in the algorithm, supports the channel's growth, and, well, it lets us keep making this type of really in-depth analysis for you. It's how we make sure we can keep delivering these sort of shortcuts to being well-informed on the most complex stuff in crypto and finance.
Absolutely. And that engagement, it really helps us figure out what sparks your curiosity. And in a space moving this fast, building a community that kind of unpacks these complex topics together, that's invaluable. Your input helps us tailor these deep dives, making sure we're hitting the insights that matter most to you, our listeners.
Okay, so let's tackle the elephant in the room first. Or maybe it's more like the massive cloud that's been hanging over Ripple for years, really dampening its potential after what felt like, an eternity of headlines, legal back and forth, incredible market tension. Ripple has finally reached a resolution in its multi-year fight with the SEC. It felt like that sort of Damocles was just permanently hanging there, didn't it? So now, with this legal clarity, what does this actually mean for XRP? Beyond just a collective sigh of relief, this isn't just a win, people call it a game changer, but what specific game has actually changed here?
That's exactly the right question. What's really fascinating here, and I think it often gets missed in the initial buzz, isn't just that they won, but the nuance of the legal precedent it sets. For years, the whole crypto landscape has been grappling with these really fundamental definitions like what exactly is a digital asset legally? Is it currency, a commodity? Or, like the SEC argued with Ripple, is it an unregistered security? The SEC's lawsuit against Ripple, it was all about that. They alleged that XRP, Ripple's native digital asset, was like entirely an unregistered security, but the resolution, it didn't paint with such a broad brush. The court actually very carefully distinguished between two types of XRP sales. It ruled that, yes, XRP sold directly to institutional investors. Those initial direct sales could be seen as an unregistered security offering. However, and this is the absolute key distinction, the thing that provides a kind of legal blueprint for the whole industry, the programmatic sales of XRP, the ones on secondary exchanges to retail investors like you and me, those were explicitly ruled not to be securities. Now, that's not just like a semantic win. It's a huge practical shift. It offers a critical legal framework. It basically tells other crypto projects, look, here's how you might structure your token launch, your tokenomics, to potentially avoid these regulatory traps, at least for secondary market sales. Getting rid of that broad security label for XRP traded on exchanges, that removes the single biggest obstacle to Ripple's operations and, its future growth. It lets them move forward with a much clearer path, even if it's still, complex.
That distinction, institutional versus programmatic sales. That's actually, quite clever. Not a blanket pass, but a very surgical clarification. And you hit on something crucial there, the years of uncertainty. It really did feel like that ambiguity was just stifling innovation. A chill effect, not just for Ripple, but for the whole sector. For years, every single move Ripple made was seen through the lens of this lawsuit, cast a long shadow over partnerships, how big financial players even looked at the asset. So now, with XRP's perception fundamentally changed, how does this clarity specifically impact investor confidence, especially from, traditional finance? And what about broader market integration? What are the deeper implications there?
You've nailed the impact of that uncertainty. Just imagine trying to build a global financial network, aiming to disrupt a multi-trillion-dollar industry, when the very asset at the core of your system is under this existential legal threat about what it fundamentally is. That was Ripple's reality. It created a risk premium on XRP, naturally, and a real reluctance among large conservative institutions to even touch the asset. Now, with XRP, especially in that secondary market context, no longer broadly labeled as security. Well, it directly and profoundly impacts its legitimacy, its perception. This isn't just about Ripple being able to operate, it's about its power to attract serious capital. See, regulatory ambiguity. That's often the #1 reason big institutional investors, the major TradFi players, hesitate with digital assets. They operate under incredibly strict compliance rules. They demand certainty, clear rules of the road, solid legal frameworks, this clarity differentiating sales types. It's poised to invite significant institutional adoption. We're talking about players managing trillions, pension funds, asset managers, corporate treasuries. They need those robust legal foundations.
Without that huge security cloud hanging over it, Ripple can now aggressively chase that cross-border payment integration without the constant fear of legal blowback or classification fights undoing years of work. And you can already see the contrast, right? Compare this clarity to other projects still fighting similar battles or facing no guidance at all. Ripple now has a distinct kind of first mover advantage in this newly clarified regulatory space. So yeah, this legal win translates directly into more trust from TradFi, paving the way for broader market integration, potentially speeding up adoption of XRP for real use cases, moving it, hopefully for them, from just a speculative asset to a foundational tool for global payments.
Okay, so it's like they finally got the regulatory green light, the signal to unleash their full potential, not just for retail traders, but for the actual titans of finance. Which brings us perfectly to the really exciting and frankly audacious part of Ripple's whole vision. Right, with those litigation shackles finally off, Ripple isn't just taking a breather. They're looking squarely at their Mount Everest, trying to unseat SWIFT. This is where it gets really interesting, I think. For an institution that's been the undisputed backbone of global finance for, 5 decades? Is this ambition, a bold vision, or is it just tilting at windmills? Our sources paint a compelling picture of RippleNet as a serious contender. But for anyone unfamiliar, SWIFT, the Society for Worldwide Interbank Financial Telecommunication, has been the main global messaging system for banks since the 70s. So why then do our sources keep describing SWIFT infrastructure as outdated now in the context of modern digital finance? What exactly is Ripple trying to disrupt here?
That's the core of the challenge, yeah. And it really boils down to fundamental architecture. SWIFT, it's undeniably reliable, everyone uses it. But it just wasn't built for the digital, instant-on, always connected world we live in now. Its system relies on something called correspondent banking relationships. Okay, so to break that down, imagine your bank, say, in London, needs to send money to someone's bank in Thailand. It's highly unlikely your bank has a direct account with that specific Thai bank, right? So your money doesn't just go direct. It might hop from your bank to a bigger intermediary bank or correspondent bank, maybe in New York, then maybe another one in Singapore. And then finally, it gets to the recipient's bank in Thailand. Now, each one of those hops, it's a separate transaction. It needs manual reconciliation. It involves different operating hours, different time zones. And crucially, each intermediary usually takes a fee. This leads to all those notorious pain points we hear about. Settlement times taking multiple days, often 3 to 5 business days, sometimes longer. Costs that fluctuate, they're unpredictable. And a real lack of transparency.
Your money just vanishes into a black box for days. You can't know its exact status or even the final amount that's going to arrive. It works, sure, but it's cumbersome, it's slow, and it's expensive. RippleNet, on the other hand, is designed completely differently. It's built from the ground up for real-time gross settlement, or RTGS. It uses distributed ledger technology, specifically the XRP ledger, and it facilitates direct peer-to-peer transfers between financial institutions, cutting out many of those slow, costly middlemen. What does that mean? Significantly faster settlement times, often we're talking seconds or minutes, compared to SWIFT's days. It also drastically cuts costs by removing layers of banking fees. And it boosts transparency because everyone involved can see the transaction status almost in real time. To quickly visualize the difference, think of sending something via the global postal service versus sending an instant message. That's the kind of speed difference we're talking about. But the engineering difference is maybe even more profound. SWIFT is like a store and forward system. Messages get sent, processed in batches, then forwarded, kind of like old data packets on a network.
RippleNet, powered by its unique consensus mechanism on the XRP ledger, offers true real-time gross settlement. Every transaction is finalized almost instantly across all these distributed validators. This eliminates the need for intermediary banks to hold and reconcile separate ledgers. It's not just faster, it's a fundamentally different way of achieving trust and finality in transactions. Now, SWIFT has tried to modernize, right? They have SWIFT GPI, Global Payments Innovation, which improves tracking, but it still relies on that same underlying correspondent banking network, which makes it inherently slower and more costly than a blockchain-native solution like RippleNet. Our sources really highlight that Ripple's advantages aren't just like marginal improvements. They represent a real leap in efficiency, making SWIFT's established system look increasingly, outdated in our modern digital economy.
Wow, yeah. That deep dive into correspondent banking versus real-time settlement, it really clarifies why SWIFT is sort of struggling to keep pace. It almost reminds me of, trying to send a vital document by fax when email exists. It gets there eventually. But you're always wondering if there's a better, cheaper, faster way. And in global finance, eventually costs a lot of money. But okay, we're not talking about some small niche market here, are we? Ripple's aiming at truly staggering volumes. Let's talk about the sheer size of the prize, the global remittance and settlement market. What kind of economic behemoth are we actually discussing?
Yeah, this is where that explosive potential for XRP's use case really comes into focus. Moving beyond just tech superiority to actual economic impact, the global remittance market alone, estimated over $700 billion a year. Annually, we're talking about the absolute lifeblood for countless families, small businesses globally, money migrant workers send home, families supporting relatives abroad, small companies making international payments. These are often the exact transactions where high fees and long delays hit the hardest, directly impacting livelihoods, local economies. RippleNet is positioned perfectly to offer a significantly more efficient, cheaper solution for these transfers, potentially saving billions in fees and days in waiting time. But the ambition, like you said, doesn't stop there. Swift handles an absolutely astonishing 150+ trillion in annual settlement volume globally. That figure covers practically all interbank transfers, corporate payments, cross-border transactions, the very arteries of global commerce, everything from a multinational paying suppliers overseas to central banks settling debts. Now, if RippleNet managed to capture even a tiny fraction of those huge flows, just say 1%, maybe 5%, or even 10%, the implications for XRP's market capitalization would be enormous. It would move it into an entirely different league. Potentially one of the largest digital assets by market cap, based not on hype, but on real utility and massive transaction volume. Think of it like a small leak in a massive dam, but in reverse. Even a tiny diversion of market share, just a few percentage points of that multi-trillion-dollar volume from Swift's rails over to RippleNet. That could have huge financial implications for the utility and therefore the value of XRP. It's not just about taking a slice of the pie. It's about potentially rerouting a significant chunk of global financial traffic through new, faster, more modern rails. The sheer scale of this market opportunity, it's hard to overstate. It really positions Ripple's challenge to Swift as one of the most significant narratives in fintech today, a genuine battle for the future of how money moves globally.
Right, and this brings us to the broader implications, which seem to extend far beyond just Ripple itself. This victory feels like a win for the entire crypto space, doesn't it? Ripple's legal success against the SEC, it sets this vital precedent for other crypto projects that are facing or maybe anticipating similar regulatory fights. It gives them a blueprint, almost a legal roadmap for defining digital assets going forward. But given the regulatory landscape is still, evolving everywhere, does this ruling really create a universally clear path? Or could Ripple still face hurdles, maybe from state regulators or other federal agencies like the CFTC, especially if XRP's role changes or grows?
That's a crucial point, and yeah, it's nuanced. This ruling absolutely provides a significant legal precedent, primarily because it's a federal court making a clear distinction about secondary market sales of a major digital asset. This isn't just Ripple's win, it gives a clearer legal framework to development teams, lawyers, exchanges, everyone who's been operating under this cloud of uncertainty, wondering if their tokens might suddenly be deemed securities. It shows that not all digital assets are automatically securities, especially when traded programmatically on exchanges. And that's a massive win for the industry. However, you're right to flag the ongoing complexities. The U.S. regulatory environment, it's still a patchwork quilt. While this federal court ruling offers powerful guidance, it doesn't completely preempt all potential challenges. State-level securities regulators, they could still raise questions, although their authority often takes a backseat to federal rulings in practice. More significantly, perhaps, the Commodity Futures Trading Commission, the CFTC, has asserted jurisdiction over certain digital assets it sees as commodities. So, while the SEC ruling clarifies XRP's non-security status in some contexts, if XRP's utility were to expand significantly into, say, derivatives or other complex financial instruments, the CFTC could potentially step in and assert its own oversight. So look, while a monumental hurdle has definitely been cleared, Ripple, just like any innovative financial entity, will need to keep navigating this multifaceted, evolving regulatory world, always mindful of how its assets' utility and market role might be seen by different bodies. But still, this win gives them a critical, strong foundation for those future conversations.
Okay, so it's not just Ripple versus Swift, but the whole industry is sort of inching towards a more structured, maybe more accepted future. And this whole movement aligns perfectly with that core Web3 vision, right? Decentralized rails replacing old, clunky legacy systems. Can you elaborate a bit on this broader shift, like the philosophical and technical change happening in finance? What are the deeper underpinnings beyond just saying blockchain technology?
Exactly. This isn't happening in a vacuum. It's part of a much bigger global trend that goes way beyond just a new piece of tech. The Web3 vision, it's not just a buzzword. It represents a paradigm shift towards an internet and, by extension, a financial system built on decentralized protocols, where users actually own their data and assets. This means moving away from centralized gatekeepers, think Google or Facebook for the internet, or in finance, traditional banks and intermediaries towards open, transparent, and programmable networks. Philosophically, it's really about redistributing power and control. Instead of relying on one central entity for trust and validation, which is inherently vulnerable, right? Single points of failure, censorship, opacity. Web3 proposes a system where trust is spread across a network of participants, secured by cryptography, governed by code, not just by potentially opaque corporate or government structures. Technically, yeah, it involves a mix of things. Distributed ledgers like blockchains, smart contracts that automate agreements without needing a middleman, and digital assets that represent value directly on these networks. Ripple's specific fight and their push into global payments now. It's a really vivid example of this larger philosophical shift playing out in the real world, actively challenging the centralized control and the built-in inefficiencies of the legacy financial operating system.
That's a powerful way to frame it. And we are seeing these supporting stories all over the place that illustrate this trend, showing it's not just theoretical talk. Like you mentioned El Salvador making Bitcoin legal tender, Maker DAO expanding to real-world assets, even JP Morgan, a giant of traditional finance, building its own blockchain, Onyx. These are all incredibly significant. Maybe let's just take a moment to quickly touch on each one. How do they exemplify this broader shift towards decentralized, or at least blockchain-based, rails?
Yeah, absolutely. Each one gives us a unique angle on how traditional finance is being challenged and reshaped. Take El Salvador making Bitcoin legal tender. That wasn't just, a political headline. It was a sovereign nation actively challenging traditional fiat currency systems, embracing a decentralized alternative for everyday transactions and, crucially, for remittances. For a country that relies heavily on money sent home from abroad, often losing chunks to high fees from traditional services, adopting Bitcoin was a pretty radical move. Trying to bypass those legacy channels, put more money directly into citizens' hands. It's a real-world, national-scale experiment in financial sovereignty, in disintermediation, directly aligning with that Web3 idea of empowering individuals over centralized control. Then you've got MakerDAO's expansion into real-world assets, RWAs. MakerDAO's a cornerstone of DeFi, decentralized finance famous for its DAI stablecoin, their move into RWAs. That represents DeFi actively building bridges into traditional financial instruments. Bringing the transparency, the efficiency, the composability of blockchain to assets like, real estate, bonds, even things like carbon credits. This isn't really about replacing banks entirely, but more about building parallel, potentially more efficient, and globally accessible financial infrastructure. Infrastructure that can tokenize and manage traditional assets on-chain, unlocking liquidity, reducing friction for a global audience. It shows DeFi maturing, learning to interact with, and maybe even enhance parts of the traditional system. And finally, JP Morgan's Onyx blockchain. This is critical because it shows the TradFi world isn't just sitting back and watching. They're actively integrating blockchain, even if it's often in a permissioned, kind of walled garden way. Onyx is JP Morgan's enterprise-grade permissioned blockchain network. It's designed for things like wholesale payments, interbank transfers within their ecosystem. It's basically their answer to improving cross-border payment efficiency and tokenizing assets, but within a controlled environment they manage. What this tells us is that the shift towards blockchain is, probably inevitable, but maybe not a pure replacement scenario. Major institutions see the efficiencies blockchain offers for payment rails. They aren't necessarily jumping onto public, permissionless blockchains like the XRP ledger for everything, but they are definitely leveraging the underlying tech. This points towards a future of hybrid systems, maybe, where legacy systems get upgraded or interface with or are gradually replaced by more efficient blockchain-native solutions. It's less about a sudden revolution, maybe more an evolutionary integration. Traditional and decentralized worlds converging to build a better global financial infrastructure. It's about adaptability, and the big players are clearly trying to adapt.
That's a fascinating perspective, seeing how all these different threads, from national adoption to DeFi innovation and even big bank projects, all point towards this kind of unstoppable shift. And Ripple, they're not just focused on today's remittances or challenging SWIFT as it is now. They're also heavily involved in that whole emerging landscape of central bank digital currencies, CBDCs. What's their specific strategy there, and how does XRP fit into that, increasingly crucial future for sovereign money?
Yeah, Ripple's positioning in the CBDC space is incredibly forward-looking. It really highlights a potential future role for XRP that goes way beyond just simple interbank transfers. Think about it. As countries all over the world develop their own digital currencies, a digital euro, a digital yuan, a digital dollar, a massive challenge looms. Interoperability. How do all these different national CBDCs talk to each other? How do they transact seamlessly, securely, efficiently across borders? It's basically the same problem SWIFT faces with fiat currencies today, just applied to a new digital world. And this is exactly where Ripple sees itself playing a critical role. They're actively positioning the XRP ledger and, by extension, XRP itself as a potential critical global liquidity asset, a bridge between these diverse CBDCs. Imagine a future scenario. A bank holding digital euros needs to exchange them for digital yen or maybe digital dollars. Instead of relying on traditional FX markets, which are often slow, costly, involve multiple FX desks, correspondent banks, XRP could act as this neutral, instantaneous bridge currency. The bank with digital euros converts them to XRP, which is then immediately converted to digital yen by the recipient bank. All within seconds, minimal fees. Ripple's even put out extensive white papers specifically outlining how the XRP ledger can support CBDCs, detailing its tech capabilities, high transaction speed, low fees, security, ability to operate within regulatory frameworks, all essential for national digital currencies. This positions XRP not just as a tool for retail remittances or enterprise payments, but potentially as a foundational layer for the future of sovereign digital money itself, enabling smooth cross-border flows between totally different national digital currencies, boosting global financial interoperability. It's a strategic move that suggests a potential future where XRP isn't just competing with SWIFT, but maybe also enabling the very infrastructure for the next generation of global currency exchange, positioning itself as a vital piece in a whole new global financial architecture.
That's a really compelling vision, painting XRP as a sort of digital lingua franca for future CBDCs. Clear Ripple is playing a very, very long game here. Okay, so we've talked about the huge legal win, the audacious challenge to SWIFT, the bigger picture for Web3 and global finance. But now, let's bring it right back down to ground level for you listening. What does all this actually mean for people holding XRP? Or maybe those looking to trade on this news? It definitely sounds like we should expect a pretty wild ride. What's the outlook for XRP holders? And what should traders be keeping a really close eye on in this evolving landscape?
Yeah, for existing XRP holders, the outlook is, well, undeniably more bullish now, especially if banks and payment providers really do accelerate their adoption now that there's more regulatory clarity. That legal win removes a massive barrier that historically choked off institutional engagement. Before, that legal uncertainty meant many big, risk-averse financial players just couldn't even consider integrating RippleNet or using XRP, no matter how good the tech might be. Now, with that uncertainty largely lifted for secondary market sales, we could see a cascade effect. Partnerships, integrations that were maybe put on hold could now move forward. Financial institutions, payment processors, maybe even central banks who were hesitant because of the SEC suit. They can now seriously evaluate using RippleNet and XRP for their cross-border payments. This isn't just hypothetical, it's a direct potential impact on the utility and therefore the demand for XRP. If Ripple does successfully capture even a fraction of those massive markets we talked about, the hundreds of billions in remittances, the trillions in interbank settlements, the increased utility demand for XRP as that bridge currency would be truly significant. It would act as direct upward pressure on its value, driven by real-world usage, not just speculation. And that shift towards fundamental utility-driven demand, that's what long-term holders have really been banking on.
And for those actively trading, this whole Swift versus Ripple narrative, that's bound to just intensify, isn't it? That kind of speculation, combined with fundamental shifts, usually means big price movements. But it also sounds like a recipe for, well, heightened volatility. What should active traders be ready for?
Oh, absolutely. Traders should definitely brace for increased volatility as this Swift versus Ripple story heats up in the market. We've already seen it, right? How past XRP rallies were directly tied to key moments in the lawsuit. Remember those sudden spikes on favorable rulings? Or the sharp drops on bad news? The market is incredibly reactive to these milestones, often front-running news or, frankly, overreacting. Now, with the core legal fight mostly settled, the focus is going pilot programs with banks, positive reports on RippleNet's efficiency gains, even just market chatter about expansion into new payment corridors. Any of that could trigger substantial price swings. Conversely, any setbacks, any perceived difficulties in gaining market share could also lead to sharp corrections. It becomes less about the regulatory drama and more about the fundamental growth story, and that can be even more impactful on price. So people trading this need to be hyper aware of the news flow, global economic trends affecting remittances, and just the broader market sentiment around this whole competition. Technical analysis will also be crucial, obviously, to navigate these potential swings, identifying support, resistance levels as this big macro narrative plays out.
Okay, given all of that,
What are the absolute key metrics that investors, analysts, anyone watching this space should really be tracking to gauge Ripple's actual progress and XRP's potential? Because like you said, it's not just about the price chart anymore. It's about seeing if fundamental adoption and real-world utility are actually taking hold.
Precisely. This isn't just price speculation anymore. It's about watching for fundamental adoption, for real-world utility embedding itself into the global financial system. There are several key metrics that will really tell us if Ripple is gaining genuine traction in remittances and settlements. First, you've got to keep a close eye on XRP ledger activity. This covers a range of on-chain data. Transactions per day is a big one, the growth in the number of active wallets, and maybe most importantly, the actual on-chain volume being settled. These are direct measures of how much the XRP ledger is actually being used for value transfer. Is adoption by institutions and payment providers truly picking up speed? If institutions are integrating RippleNet for cross-border payments, you should see a clear, sustained increase in these metrics. That signals genuine utility. Second, keep considering those market cap scenarios we touched on. I know they're theoretical, but revisiting that idea, projecting XRP's potential value based on capturing a slice of Swift's market share, whether it's 1%, 5%, 10% of that $150 trillion annual volume. It provides a powerful framework for understanding the potential upside tied to real utility. These aren't price predictions, obviously, but they help contextualize the sheer scale of the opportunity Ripple's chasing, and what sustained success could mean for XRP's valuation, moving it beyond its current market position. And finally, you need to continuously monitor the Swift versus Ripple settlement speed and cost comparison. Look for real-world data, independent case studies, reports from financial institutions using both systems. That will illustrate the ongoing efficiency gap. Look for concrete data points. How many banks are actively using RippleNet's on-demand liquidity, or ODL product, the one that actually leverages XOP? What are the reported average settlement times? What are the cost savings being reported? If RippleNet consistently, demonstrably outperforms Swift GPI on speed, cost, transparency for cross-border payments, that data will be the most compelling argument for its continued adoption and, by extension, for XRP's long-term value. These aren't just abstract numbers. They are the real, quantifiable pulse of Ripple's progress in trying to reshape global finance. Hashtag, outro.
So wow, we've really unpacked Ripple's monumental legal win, its incredibly audacious sights set on disrupting Swift, and what all of this could mean for the broader future of money. From that critical regulatory clarity paving the way for institutions, to RippleNet's profound potential to shake up global remittances and settlements, and even its strategic play in the emerging CBDC world. This deep dive has really shown us just how much is at stake, how fundamentally the financial world seems poised to shift. It's a fascinating, complex, definitely high-stakes time to be watching this intersection of TradFi and the burgeoning Web3 ecosystem. And hopefully this discussion has given you a real shortcut to being well-informed on these pivotal developments. What a deep dive today.
Yeah, this whole journey of Ripple's, it really highlights a fundamental ongoing tension, doesn't it? The battle between the old, established systems, reliable, sure, but often slow, costly, versus these agile, decentralized innovations promising speed, transparency, efficiency. It really raises an important question for you, our listener, to kind of chew on. Given the choice, would you ultimately trust an emerging system like RippleNet with its underlying tech over the traditional banking rails for your global transfers, especially as the tech matures and adoption potentially grows? Or do you think the established order Swift, the big banks, will simply adapt fast enough to hold its ground? Think about what that choice means, not just for technology or your personal finances, but for trust, for power, and for the future distribution of financial control in our increasingly connected world.
That's a really powerful question to mull over. Do you think Ripple can actually replace Swift, or is that vision just too ambitious? If banks and institutions do adopt XRP at scale, are we looking at potentially the biggest altcoin bull run ever, driven purely by utility this time? Or, despite this big win, is it still just too risky for your portfolio? We genuinely love to hear your thoughts on these crucial questions down in the comments below. Thank you so much for joining us on the deep dive today. Keep exploring, keep learning, and we'll catch you next time as we continue to unpack these fascinating rapid shifts happening in global finance.